Dilip, good afternoon. Thanks for joining in. I know we've discussed banking at length with all our experts, but Dilip, come in because that is that one space that is really driving the market mood right now in today's session, even more so. What are your thoughts here? What would you advise your top clients to do currently in banking or BFSI?
Well, Neeraj, we all know that the asset quality has been a very chronic kind of pain for this particular sector for quite some time now. But I think it would be fair to assume that probably we are reaching the end of the pain at this particular level, maybe a couple of quarters more. And if one were to even say, take into account that India is growing at 7.5% and people are optimistic that it would be 8%, then it would be fair to assume that this kind of GDP growth would provide a good tailwind in turning around a lot of industries and consequently a lot of those NPAs. So I think we are looking at some of the parameters which look possibly be the worst in so many years, whether it's a credit growth, asset quality, NII growth. I think probably we are about to cross all that hump, and I think the optimism is bound to return in a very big way in the financial sector, especially if we see the way the government is trying to open up those infra sector and the consequent multiplier impact that it's going to have. So I think this is one sector which I think we like. So where I think we will see a good traction, good visibility and improving kind of scenarios on most of the parameters. So I think we are overweight on the financials.
Right. I understand the overweight stance on private banks and the financing companies, the NBFCs. Dilip, what would be the tipping point to look at PSU banks? Because that's still a debate in the market. The conviction on the turnaround is still not as strong, even though concerted effort is being made in addressing the NPA problem and, bringing about perhaps more incentives for the sectors or, the borrowers which are the pain point, essentially infrastructure, stroke power, stroke steel.
Well, I think all of those what you mentioned is really going to provide a good amount of tailwind. But I think more important is the perception. Probably I think that is where I think things will change very gradually as they try to professionalize the top management and incentivize them with a suitable structure. But at the end of it, I still feel that if on one hand we say that we are upbeat on the economy, and on the one hand we say that the GDP growth is going to be good, and on the other hand we refuse to believe that that will get reflected in the performance of the banks, because what has happened is really a matter of the past, where I think the downturn of the economy is what we have seen in the asset quality of the banks. So I think all those probably we are, as what I said, they are probably worst, played out in a very bad way for the sector. Maybe couple of quarters would still be the pain. So I think the PSU banks probably I have taken it on the chin, and probably I will still say that if you don't want to look about some of these PSU banks for next 1 year, then probably it's time to just take them, hold them, and maybe just ride them, So next 1 year, I'm not too sure what's going to really happen. There will be further pain points, possibly. But beyond 1 year, I think we will start seeing the optimism of the economy in the banks too, especially the PSU banks.
Dilip, just one quick word on IDFC. That stock has been moving up since Friday on thoughts that if they don't have to keep the holding structure because of the on-tap rules that have just come out, and therefore that means a reduction of the holding company discount too. I mean, you probably looked at the combined entity since a really long time. Do you have any thoughts here?
Well, I think IDFC will still be a little long-drawn process. Maybe some of the optimism has creeped in because of some of the news which has really come. But otherwise, I think performance-wise and in terms of ROEs and ROAs, I think it will still require at least 1.5 years minimum before they really start coming to the reasonable levels. So I won't really be in a hurry to buy this particular stock. I think there are other stocks which can probably be better as compared to this particular one.
Okay, we'll try and find out some of these from Dilip Bhatt in just moments from. Dilip, you were referring to some stocks that are better than IDFC, and I'm sure there are a whole lot, because a lot of companies by and large in this result season too have come out with good numbers. What has stood out for you? What would be the top recommendations as a house that Prabhudas Lilladher has right now? The top one or two?
Well, I think Neeraj, this week is full of results, and I think a lot of companies which are under our top picks are really going to come out with the numbers by the weekend. But having said that, I think I would still play for the infra space very much, Neeraj. I think this government knows what to do, how to do about infra, and I think the way they are really going about it is very commendable. And I think this is one space which we think will be the immediate beneficiary. So I think from the top down, of course, it's Larsen & Toubro or something like a Sadbhav Engineering, which looks pretty strong, or something like Nagarjuna Constructions, or maybe MB Infra. Something like that, I think, is some of these companies from the sector looks pretty interesting from the current level as far as this particular sector is concerned. And from the pharmaceutical space, we still like Jubilant Life Science very much, and I think Aurobindo Pharma still continues to be our pick. I think that's the company which probably will keep on showing a very good run rate of quarterly profits, which will add up to a very significant number on an overall basis. So I think these are some couple of things which you really like, apart from the financial space which we spoke about.
Okay, Dilip, before we let you go, I think a space that has been extremely abuzz is real estate. Indiabulls real estate is right now at new highs, and there are a lot of moves that are happening. Higher FSI for slum rehab. We hear higher FSI by and large for this island city of Mumbai. The REITs model for Indian companies by and large. Anything? I mean, do you believe an investment in this space could be warranted? And if so, where would you recommend people put their money?
So I think amongst a lot of these companies, I think Indiabulls Real Estate is the one stock which has good potential, good financials, and I think leverage wise they are not stretched, and I think probably they are doing all the right kind of things. They are one of the few people who have really, on a very visible basis, have really constructed some of the big marquee kind of structures in Bombay at the moment, and maybe they are doing it elsewhere. But number wise, I think Indiabulls Real Estate really looks the pick of the lot. But overall on the sector, I'm still not pretty optimistic, with due respects to everyone. I think this is one sector which probably will still go through a lot of readjustment, because the new norm is that you have to really keep on doing the construction. The real estate prices, if the government intention is anything, it will be they will force it downwards, so that it is more affordable to the common man. In all this scenario, I think in this readjustment, I don't think the real estate companies will make any great money, is my personal opinion. And I think that at the same time, the stress is really not coming off for a lot of the companies, in terms of the financial stress I'm talking about.
Yeah, understandably so. Dilip, thanks very much for taking out the time to speak with us today. Really appreciate your views and insights on the markets.